It's August 18, 2014. Current time is 10:57 GMT. Jay Meisler here with a daily Forex update. First of the week. This is a week where the key event is not going to be until Friday, when the Jackson Hole speeches are due from Yellen and Draghi. Both should be dovish. Question is, which one does the market focus on more, and where is there greater risk of surprise? Certainly not with Draghi. And probably not with Yellen, but that would be the greater risk. Now we have some PMI, flash PMIs in between, central bank minutes, etc. But to start the week, the focus has been on sterling, where Carney threw another curveball. I'm not sure what the story with this guy is, because he's flip-flopped in a couple of days, dovish, then a little more hawkish. Sterling gapped up to open the week, and it's kind of stayed in a tight range since then. We have geopolitics, been quiet over the weekend, so markets have a little more calm on Monday. We're in the last 2 weeks of August, which tend to be, besides the end of the year, the thinnest period of the year, so keep that in mind when you're trading. Now, if there's a pattern here, before I go through, here's a Euro-dollar daily chart, and I'm hoping it's coming through because I have some issues with my screen, and I hope the bottom of this comes out okay, but in the euro, we had the 20-day moving average is now down within the range at 134.11. So if you want a key level on a closing basis, it's 134.11. And here's the current pattern. Last 19 days, including today, we traded between 133.33 and 132.34.85. Last 16 days, we've traded between 133.33 and 134.45. That's a 112-point range for almost 2 weeks. Well, actually, a little over 3 weeks. And during that period, that 16-day period, the closing range has been 133.64 to 134.33. So you put that in perspective, in a closing base, that's 36 and 33. We've had a 69-point range on a closing basis, so no wonder the 20-day moving averages move within the current range, and that's what I would look forward going forward. Now, as far as other charts go, you can see right here, and I'll just point that out for a second. Here is your range. Still have a down channel. Key levels are still the same, 134.45 on top, 133.33 on the bottom. Now, if we look at the 4-hour chart, we've been flirting with that 100 period moving average. In the 4 hours, we have not really been established above it, still below the 200. Now, interesting, on the 1-hour chart, and reflects the loss of momentum here, we're actually above the 100 and 200 period hour moving average, which typically might be considered bullish, but if you look at this, it's kind of like a flat line more than anything else right now. So if you want to use a range today, you pick your range, probably trade it. Doesn't look like a market that wants to follow through on a typical Monday, but the onus is still on the bear side. I mean, on the bull side, to get if there are any bulls, to get a close above 134.11, which would at least signify what we're seeing in the pattern of a loss of momentum. No data is coming out today. Market will look at stocks, look for geopolitical news. Otherwise, most likely we see a range day today. But I said the onus is on the bull side to get above 134 and close above that 134, that 20-day moving average. But 20 days for a range, or even 16 days for a range and compressing range, is too tight, and we are gonna break from it. Question: what's going to be the catalyst? For me, still the downside is at risk, but we have to take at that 132.94 target to set this market going again. Now, I pointed this out before. I'll do it again. Here is an article. Actually, more than an article. It's a guide that we put together. It's how to become a better Forex trader. Simply click on this link. It's really worth reading, especially in this market. Covers a lot of ground. So, link is right here. Feel free to contact me anytime about it. Good luck, good trading. And let's hope we get some more volatility tomorrow, because today it looks like it's one of those days.